Cryptocurrency regulation around the world. As cryptocurrency transformation from virtual investment to a balanced portfolio stablemate continue to gather pace, government around the world remain divided on how to regulate the emerging asset class. Below we break down the current digital currency regulatory landscape by country. Keys takeaways. As cryptocurrency has become a more significant factor in the global investment landscape, countries have taken different approaches to regulate the asset class. Despite the prevalence of cryptocurrency in the United States, the country hasn't yet developed a clear regulatory framework. The patchwork of regulation in other countries means that cryptocurrencies are subject to different classification and tax treatment around the world. Canada. Regulators have generally taken up proactive stance toward crypto in Canada. It became the first country of approve a Bitcoin exchange trade fund. The first launched on February 18, 2021, with the second launch on February 19, 2021, both on the Toronto Stock Exchange. Additionally, the Canadian Securities Administrator and the Investment Industry Regulatory Organization of Canada have clarified that cryptocurrency trading platform and dealers in the country must register with the provincial regulators. For furthermore, Canada classifies cryptocurrency investment firm as money service business and requires that they register with the Financial Transaction and Report Analysis Center of Canada. From a taxation standpoint, Canada treats cryptocurrency similar to the other commodities. United States. Despite a large number of cryptocurrency investors and blockchain firms in the United States, the country hasn't yet developed a clear regulatory framework for the asset class. The Security and Exchange Commission typically views cryptocurrency as a security, while the Commodity Future Trading Commission calls Bitcoin a commodity and the Treasury calls it a currency. Cryptocurrency exchange in the United States fall and the crypto regulatory scope of Bank Secretary Act and must register with the Financial Crime Enforcement Network. They are also required to comply with the anti-money laundering and combating the financing of terrorism obligation. Meanwhile, the Internet Revenue Service classification cryptocurrencies as property for federal income tax purpose. Crypto investors should closely monitor a high-profile court case between Ripple Labs included and the SEC for violation registers. Provincial of the Federal Securities Law filed in December 2020. More recently, it was announced on September 7, 2021 that the agency threatened to the Sure Lending digital currency exchange, Coinbase Global, for further regulatory clarity on a new program called Lend. A few days later, Coinbase ended the program. United Kingdom. The United Kingdom considers its cryptocurrency as property but not legal tender. Additionally, cryptocurrency exchange must register with the UK Financial Conduct Authority and are banned from offering crypto derivatives trading. Moreover, the regulatory body has introduced cryptocurrency specific requirements relating to know your customer, as well as the above mentioned AML and CFT. Although investors still pay capital gains tax on the crypto trading profit, more broadly, taxability depends on the crypto activities undertaken and who engages the transaction. Japan. The land of the rising sun takes a progressive approach to crypto regulation, recognizing cryptocurrency as legal property under the Payment Service Act. Meanwhile, cryptocurrency exchange in the country must register with the Financial Services Agency and comply with the AML CFT obligation. Japan treats trading gain generated from cryptocurrency as miscellaneous income and taxes investors accordingly. Australia. The land down undertakes a relatively proactive stance toward crypto regulation. Australia has classified cryptocurrency as a legal property, which subsequently makes them subject to capital gains tax, exchange and free to the operate in the country provided that they register with the Australian Transaction Report and Analysis Centre and meet specific AML/CFT obligation. In 2019, the Australian Securities and Investment Commission introduced regulatory required for eventual coin offering and banned exchange offering privacy coins. Singapore. Similarly to the United Kingdom, the island states classified cryptocurrency as property but not legal tender. The country monetary authority of Singapore license and regulates exchange as outlined in the Payment Service Act. Singapore in part gets its reputation as a cryptocurrency safe haven because long-term capital gains are not taxed. However, the cryptocurrency tax is component to the regulatory transaction in cryptocurrency treating gains as income. China. The emerging global power does not class cryptocurrency as legal tender. However, it does classify them as property for the purpose of determining inheritance. The People's Bank of China bans crypto exchange from operating in the country, stating that they facilitate public financial financing without approval. The world's largest crypto exchange, Binance, initially launched in China but had to relocate its headquarters following the country crackdown on crypto regulation. The exact location of company headquarters is unknown. Thought there are rumors the company in is Malta or the Cayman Island. Furthermore, China placed a ban on Bitcoin mining in May 2021, forcing many engaging in the activity to close operation entirely to relocate to the jurisdiction with a more favorable regulatory environment. Like most countries, the subcontinent outlines that cryptocurrencies are not legal tender. Despite this, the country's Central Board of Direct Taxation specifies that investors must pay taxes on crypto trading profit. In 2018, the Reserve Bank of India banned financial institutions from transacting in virtual currencies. However, the Supreme Court reversed this decision in March 2020. Still, regulation remain uncertain in the country. For instance, India proposed a law in early 2021 that would make it legal to issue, hold, mine, and trade cryptocurrencies other than the state-backed digital assets. European Union. Cryptocurrency is legal throughout most of the European Union, all through exchange government depend on individual member states.